Okay, so let's get started. I'll show you my screen first. Right, so you should be able to see the 15-minute chart on gold. Okay, and I'll just squeeze in a little bit and I can see myself. Right, so I think most of you know how I get these three lines, but I'll just run through them very quickly for anybody who doesn't know. I'm going to talk first of all about the three-line strategy and then move on to Anastasia's stuff, and we'll see how far we get with it. There's about 50 slides to work through, so we may not, well, we probably won't get through them all in one session. We'll need to come back to them, but we'll make a start. So I'm looking at gold on the 15-minute chart. I'm looking at the two dashed vertical lines are actually the session breaks. So this period in between these two vertical lines is yesterday's trading period, and after this right-hand line, dashed line, where this is today's trading period. And I've already marked on the value area high, value area low, and to yesterday's POC. I'm just going to show you again, for those people who are new, how we get those three lines. We put on the fixed range volume profile, which you can see down at the bottom, which is a tool that you get in the free version of TradingView. It's also available in the paid for version, but I'll just show you how we use that one. So I click on there, and then doesn't matter whether you're top or bottom, so long as you are on the first candle of the day, and you click on the last candle of the day, and it gives you this is the volume profile. Now this dark blue area, or bright blue area, is actually where 70% of all yesterday's trades were placed. So we put our first line at the top. There were some trades placed above that, but this is the 70%. This is where the strategy gets its name from, called the V70 strategy, and we're looking at the top 70% of all trades were placed at prices within that range there. So from the top black line to the bottom black line is what, and this is, bear in mind, this is yesterday's chart. So we're looking at yesterday's value area high and yesterday's value area low, and that actually gives us our field of play for today. So this area is our field of play, and because this was the peak of all trades yesterday, it was yesterday's point of control, which becomes today's target. So if you want to sort of put a visual, that's the wrong one, this one. If you want to make it a bit more visual, what you can do is put a rectangle on that area there. And that will just sort of focus your attention on what we're looking at for the three-line strategy. We're looking, and this is a good example today actually, we're looking for trades when price is actually below the target. We're looking for buys up to the target. And so there's an example of a successful trade. If you've been around at sort of 2 o'clock this morning and spotted that it changed, a candle changed from red to green, there was an opportunity to get in and get a buy up to the line there. And just for further visual, I'll make that green because that would have been a buy up to the target. I'll just go through my checklist. Just let's imagine that I was around at 2 o'clock this morning. Before I got into that trade, I would have wanted to go through my checklist. And the first part of my checklist is the Ninja Matrix. And if I put the Ninja Matrix on, you can see that at that point there, when this first change occurred, let me just check my settings. We need to be on the 15-minute chart, we need the matrix to be on the 1 hour. So what you can see is that when this turnaround first occurred, we still had a red ninja matrix down. So I wouldn't have got in at that point. I would have waited until this ninja up occurred here, where the background changes to green. So I wouldn't have got in until at least 4:15, but I need to do further checks, and I will put the ninjacator on, and I will be looking for a ninja up. And for this to work properly, we need to change to Heikin-Ashi candles. You do get ninja up indicators without the Heikin-Ashi candles, but they're not reliable. Kevin designed this ninjacator to work with Heikin-Ashi candles. So what I'll be looking at is here, I would see that we'd already had a ninja up prior to the ninja matrix up. And the third thing I would need to on my checklist would be these moving averages. So that when this is a 13 moving average, and you'll notice it changes from red to green. This has already changed to green, so that's one good thing. The second thing I'm looking for is the yellow line, which is a 5 MA, 5 moving average, and I look for that to be above the 13 moving average. So at that point there, I'm satisfied to get into a trade. So I would have held back. I would have noticed that the candle changed from red to green, but I would have also noticed that the 13 MA was still red and that the 5 MA was still below the red 13 MA. So those conditions are not right for me to get in. I'm missing out on an opportunity for some potential pips in this particular case, but it's a much safer trade to get in once you've got a ninja up, a ninja matrix up, and a crossing over of the 5 MA over the green 13 MA. That point there is when I would be looking at an ideal entry into the trade. And if I got in at that point, my take profit would have been that red line there. So I would have hit my target at that point, and I would have been using a stop loss. I'll see if I can get this a little bit bigger. My stop loss, if I got in at that on that candle there, my stop loss would have been just below this orange dot. That's the PSAR. So I would have put my stop loss below that. My take profit would have been there, and I would have got, I'll just do a rough measurement here. I would have been looking at something like 40 pips, roughly, just up to that POC, well, yesterday's POC, which is today's target. Now, if I'm strictly following the 3-line strategy, I would have got out at that line. And my next trade would be round about now, sort of 12:45, 1 o'clock-ish, because this is when the price re-enters the value area, the field of play. So I'll be looking at taking trades up to the target, and I'll be looking at taking trades down towards the target, which means I'll be missing out on some substantial number of pips there. And because I only have a trade goal and I've become familiar with how price reacts on this pair, I would be tempted to look at getting a second trade from from this red line up to the value area high, for the simple reason that I've back tested this pair, and the number of times that it goes from bottom value area low to value area high is really significant. I mean, I haven't got any statistics to prove it, but I've noticed that would often continue beyond the target and go up to the value area high. But I would have got out of my trade at the target. I would set a take profit, and I would take that take profit. I would take those pips. I would then reassess the trade, and I would look at it at this point. I'd be looking at it at 8 o'clock this morning, and I'd be thinking, right, so what are the conditions? We've got the Ninja Matrix is still green. If you follow Jeff Goodwin, one of his favorite phrases is trust the matrix. The matrix hasn't changed, so we're still looking potentially at a buy. We've still got a Ninja up, and we've still got the 5 MA above the 13 MA. So conditions are right, for me at any rate, to get back into a trade and take it up to that point, which would be my second target. So I would take this in 2 chunks. I would take a trade up to the line, up to the red line, and I would take a second trade up to the higher black line. And as it happens today, I would have another opportunity to look at this. And so I would have taken pips up to there. I would take some more pips up to there. And then I would say, okay, let's reassess. The same as I did here. Reassessing. We've still got the Ninja Matrix green. We've still got the Ninja up. We haven't got a Ninja down until this point here. So we're still in a Ninja up. And we've still got, at this point, substantial gap between the 13 green MA and the 5 yellow MA. So it's looking very strong to continue in a buy. So I would have got in again at that point. And the only problem with that would be that if I follow my rules according to the stop loss, that's quite a big stop loss from the bottom of that, from underneath that yellow, sorry, that orange PSAR to price as it was would be quite a big stop loss. Let's just measure it where we're looking at. Say we're thinking about getting in on that candle there. We'll be looking at a stop loss under here, and price would have been somewhere up here. So we'd be looking at roughly 50 pips stop loss. Now that might put a lot of people off. It might put me off. I'd have to think twice about putting a 50 pip stop loss on there. However, I could adjust my lot size accordingly and stay in for a buy. The problem is, just looking at this chart, I don't really have a target for a take profit. Let me see if I can just move you guys out the way and focus in a little bit. No, there are no real targets. You see that black dotted line up there? That's a potential target. That's a previous high from quite a few days ago. I won't go back. I won't waste time going back, but I've marked that as a previous high. So that is a potential target, but it's a huge gap from where price was up to there. And we might be lucky and get price going up there, but it's a bit unrealistic to expect price to go all that way up there. So the problem we've got with this third potential trade is, where do we place our take profit? And I guess if I'm talking about how I'm trading this, I wasn't in this trade, by the way, but had I been in this trade, I would have sat and watched this, and I would have waited. I would have got out at this when we started to get some red candles. Just to be on the safe side, I would have got out at that point The latest I would have got out is when we got a ninja down. I wouldn't have waited for the matrix. Jeff would have waited for the matrix to change, because potentially this could still go up. I'm a little bit more cautious, and when I start seeing candles going in the opposite direction, certainly when you've got 1, 2, 3, 4, so that's 4, 5, 15-minute candles. I'm not going to sit and wait an hour and a quarter for that price to take a dive. As it did, by the way, it did take a dive. I was just setting my this Zoom meeting up, and I was watching this, and it took a huge dip down there. It is sometimes difficult to judge how many pips there are, but it went down 105 pips. So, you know, I would have been, if I'd stayed in that trade, I would have been kicking myself now, because I would have been taken out. My stop loss would have been taken out. So that's why I'm a little bit more cautious than Jeff would have been. That's not to say he's not right, because he could have had a bigger stop loss, and he could still be making profit. So to go back to my original point, the strategy that I'm teaching is the 3-line strategy. And that is all about taking, if price is below, if price is in the field of play and below the target, I take buys to the target. And if price is in the field of play and above the target, I take sells to the target. And that is as far as the 3-line strategy goes. I've started taking these trades. I've started sort of being a little bit rogue and adding on this trade here, and also taking trades outside the box. But we'll come to that in a second. The reason that I started watching Anastasia was that following this 3-line strategy on its own was successful, but I was limited to the number of trades I could take in any one day. Let me just check that I've got everything set up properly, that we haven't got people in the waiting room. Right, everybody's managed to get in. Okay. Right, so as I was saying, I was being successful taking trades from that point up to that point, and then waiting for price to come back in and go down to the target. And there was days when I was getting several trades just sticking to that strategy. But what I found was there were other opportunities that I was missing. Looking backwards and seeing that there were some huge amounts of pips that I was actually missing. So I started following Anastasia in Go Live, and at the time, excuse me, at the time, you could watch Anastasia on the FRX channel. So that was the basic package, which anybody in IM Academy has got access to. So I was fortunate that I got into watching her. At the time, she did a 5-day boot camp. It was about an hour a day for 5 consecutive days. And I've noticed that since I watched that boot camp, they've changed things a little bit. And you can't get access to Anastasia without paying for an add-on. Don't quote me, but I think you need to buy the Gold Cup add-on, which I guess is about $21, $22 a month. But I've actually got permission to share with you the slides on the basis that at the time it would have been free to you anyway. I did check, because all of the slides are copyright. They've actually got the IM logo in the background, and I was worried about getting hammered for sharing stuff that I shouldn't be sharing. So I'm going to try and work through, and I haven't done a practice run of this, but I would think we're probably going to need more than one session to cover it, but I'll make a start. If I can you now see the first slide, which says volume profile Anastasia's bootcamp slides? Can somebody let me know?
No, not yet.
No, you can't see that? Okay. Yeah. Let me just see if I can correct that. Can you see it now?
Yes.
You
Yeah,
can.
good.
Great. Okay. That means we can do it. So, volume profile. So that's what the V70 strategy is based on, but this is a different approach, and I'm getting quite a lot of additional trades because I'm following this strategy. So I'll just start by showing you this one, which is we're talking about the horizontal volume. This is the volume profile that I talk about on all of my sessions. And there are just some very brief descriptions there explaining the difference between the vertical volume and the horizontal volume. And basically, the vertical volume is time-based. So this blue candle here tells you it's a measurement of how many trades have been placed during that candle's lifetime. So if that was a 15-minute candle, these are the trades that were placed during that 15 minutes. And these different colors are buys and sells. So I'm not quite sure which. I'm guessing the orange would have been sellers and the blues would have been buys, but that's not important to us at this minute. The point this slide is trying to make is that this horizontal volume, which we use in volume profile, is about the distribution of trades placed at a certain price. So where this red line is, that is the maximum number of trades placed. So if you sort of extend that line to the price, it will tell you exactly at what price most of the buys, sells, stop losses and take profits were placed. And it also shows you, that's a peak, but there's 1, 2, 3, 4, 5 other peaks of activity. And then in between there are sort of there's less activity. So don't worry if you haven't followed all of that exactly, because it'll become clearer. And let's get used to Anastasia's terminology. English isn't her first language, so she does well to explain this in English, but she uses slightly different terms to the ones that we use. She talks about extremes, or if you watch her, she'll talk about extremes. And she talks about vacuums, and again, if you watch it, she's talking about vacuums. But I get what she's saying. She's talking about this is the extreme. A point of control is where most of the trades were placed, and these are smaller extremes, so lesser extremes, I guess you would say. And then these areas in between is where there's reduced activity, and she calls those vacuums. Now, she's also, as we do with a V70, she talks about the value area low and the value area high. And in between, you've got the point of control. Now, the big difference between what Anastasia does and what V70 does is, can you see this dotted line that's going up at sort of 60 degrees up from that low point there to that high point there? Whereas in V70 we use yesterday's trading and we draw on, we go from the first candle to the last candle, and yesterday's activity becomes our target for today. Well, here she's talking about not necessarily talking about a full day's trading, and this this period of time between that candle there and that candle there could well have been an hour. It could well have been 2 weeks. It could have been a month. But what she's saying is there's a big increase in price going on here. It's done nothing but go up. Well, obviously price doesn't go up in a straight line, but there's a lower low, if you like, and there's a higher high there. And she's simply taking the volume profile for the time period between, for the price activity that went on between that candle there and that candle there. Now, as I say, there's nothing on this chart to tell you what time scale she's looking at, but I know because I was watching the program, it was likely to have been more than 1 day. She tends to work on 1 hour candles or 15-minute candles. So even if these were 15-minute candles, that's more than a day. That's probably 2 days trading. But she's measuring from the lowest point to the highest point in whatever time period that was. We're not interested in the time period. We're interested in the price activity. So she's measured from the bottom to the top, and it's given her this point of control. She's using, I believe, the same V70. So she's using the darker grey areas as the field of play, the value area low to value area high. There's other price activity outside, but this is the other 30% of pricing. So she's focusing on the same target as we focus on V70. And so she's looking at a target which would be different to the daily. We'd be looking at a daily point of control measured over a time period from market open to market close on 1 session. She's looking at a time period that starts at the lowest point and ends at the highest point. So that's a big difference. It gives you the opportunity to take trades outside of the field of play that we would normally use. And obviously further slides will explain this, but I just need to explain this point here. This point of control, which is the peak of price, this is a price at which the peak of activity occurred. And can you see how prices sort of come up to that and then being rejected by it, and then come up to it again and being rejected, and then on the third attempt it broke through, but then it came back and went through it and rejected and went up. That's the sort of area she's looking at. This is, I guess this is what we would call consolidation. And I've mentioned this on my session before. Where this consolidation occurs, in fact, on my sessions, I would have drawn a parallel channel from the top of that to the, I would draw a parallel channel to where I thought the rotation was going on. Anastasia will use this as one of the tools that she uses to decide when to enter trades. So she would look at this and she would say, okay, this point of control is not, it's not going to be my target for, it's not going to be a take profit. It's going to be sort of a launching pad for well, in this case, launching pad to get in for a buy. Had it gone the other way, we'd be looking at a sell. But basically what's happening in this area here, what I think is happening anyway, is that buyers, there's been a very strong push in price to go up to that point. They've invested millions of pounds, millions of dollars to get price up to that point. And they're not going to let it reject easily. They're going to reinforce their positions. They're going to put more money in, which is why we've got the point of control. This is big investors putting more and more money into getting the price to go up. And they're doing it slowly, because if they do it all in one fell swoop, price will go up, but then people will start selling. So that defeats their object. So they do it slowly, they build up their positions, and then when they're ready, they'll take out stop losses. These 2 weeks here have taken out stop losses, and then they'll move the price up in the direction they want it to go. So let's move on and see. Right, so I think I'm sort of getting ahead of myself when I'm talking about things in future slides here. But so these are extremes. She talks about the extremes. So there's one extreme there. There's the biggest extreme there, but there are other points here. And if you look carefully at these, where she's drawn these rectangles, there's consolidation going on. There's consolidation going on. There's consolidation going on. And there's consolidation going on. So this is buyers reinforcing their positions. They're putting more money into a buy, more and more money into a buy, more money into a buy, more money into a buy, more money into a buy. And that's the price action that you've got to look for. So the biggest, what she's saying is the biggest volume is accumulated in consolidation. This is where they're putting all the money in. These rectangles are the outlining where the buyers have been putting the money in. And the movement in price is smaller here than it was there, and it's smaller here than it was there, and it's smaller here than it was there. So what she's saying is the smallest movement can cause the biggest volume. So these are the smallest movements, but the biggest volume of investment, if you like, is occurring at those times. And she's pointing out you do not want to take a trade inside of consolidation if you don't want to risk being stopped out, because this is a battle. Buyers and sellers are having a battle here, and buyers are having to put more money in to get the price to go in the direction they want it to. So what she's saying is don't get involved in a trade in this area here, which is why I draw a parallel channel to try and define the consolidation area. And I only get into trades when price goes out. And that's something I've learned by watching Anastasia. She's talking about, well, we know the value area. It's 70%. And often, but the point I need to stress is that, excuse me, that price often reacts on the borders of the value area, high and low. So she's showing there that it's gone outside the value area high, but it keeps coming back to it, and keeps coming back, keeps coming back, keeps coming back, before eventually it breaks through. And then the same would happen if you're working the other way. You would have those black arrows down at the bottom there. So this is very similar to the situation we're in, or we have been in today, where it went outside and then it's come back in. There's nothing to stop it going back and testing it and testing it and testing it. Anyway, I will try and move on. So we already know this. POC is the maximum volume price level, and she's demonstrating there that price often rejects off it. It comes down, it goes through, it goes back, comes down, goes through, comes back, come down, go through, come back, hits it, goes back. So it's a strong, it's a bit of a magnet. I'm trying to get to the next phase. We've already talked about the vacuum areas, and what she is, I'm not sure if I can. Oh, there, yeah. You've got decrease. This is a vacuum area, and this is a bigger vacuum area. And what she's pointing out there is that although there were less trades placed in that vacuum area, there was quite a big movement in price. And it was a one-way movement. It was all buys. There were no sells happened during that period. So nothing going on according to that, but there is something going on. they've moved price substantially, and that's what Paul calls his imbalance. And there's a similar area there. Price has moved up rapidly. You know, in the lifetime of that one candle, it's moved significantly, and that's money going in to make that happen. Where are we? So she's saying there it's a clean, fast move. Here, this is the imbalance candle, and it's a clean, fast move. It's one candle. It's moving up rapidly. It's not giving anybody any time to get in. And she's pointing out that the possibility is that they're looking for stop losses. Stop loss hunt there, stop loss hunt there. So taking out stop losses. Right, so these are just where she gives us her settings for the volume profile. This is the volume profile fixed range, which is the free one that everybody's got. She does it slightly different to Jeff. I mean, she's talking about a row size of 500, but she's still talking about value area volume of 70. So I don't think we need to dwell on that. Right, so there are three ways she uses volume profile. The first one we've just looked at, and it was sort of going from the lowest point of an impulse move. She's called it an impulsive move to the end, from the beginning of the impulsive move to the end of the impulsive move. So in this case, volume profile starts there and ends there. And she ends up with a point of control here, and she would define her field of play from that area there down the bottom. I'd need to zoom in to see exactly where it would be, but you get the idea. She's not using a session to define the volume profile. She's using the full impulsive move, the impulsive move from a low to the high. So that's the first way she uses volume profile. Right, okay, so basically she's saying that is the impulsive move, and she's got an extreme. I'll go back to that chart there. There was an extreme, where are we? I think she's probably talking about this extreme here. So if you try and bear that in mind, I can't draw on this because it's just a slide presentation. But if you try and bear that in mind, what she's saying is, oh no, it must have been this lower one. This is a POC, but she's highlighting this extreme above it. So let's go back. Yeah, she's highlighting this one. She's saying this is a POC, but we've got other opportunities. So this is the one she's concentrating on here, and she's pointing out that prices return to that. It's wick through it on that occasion. This is a massive wick upwards and a massive wick downwards, and it's come back again. So let's just read what she's saying here. Practical application: visually identify the zone with the biggest volume. So she's accepting that this is the biggest volume, but this is an almost equal volume, and her attention is drawn to that first. If price is above that zone, buyers are in control, and it acts as a support. So here we've got price above, and it's buyers are in control. You can see it goes all the way up there. If price was below that zone, then sellers would be in control. It would act as a resistance. So this line here, she's saying, is a support because price is above it. If it was the other way around, it would be acting as a resistance. So this will become clearer as we go through. She's just reiterating here what the difference is between the two volumes. You've got the time-based volume, which runs along the bottom, and price-based volume. So we don't need to dwell on that. Horizontal volume represents the interest of traders to a certain price level, taking into account all transactions executed, buys and sells during the selected period of time. And the point of control is where maximum volume happened. Okay, we're getting into interesting. This is the strategy that she teaches based on what we've just looked at. She says there are 3 steps to her checklist: space, rejection, and closure. And then we've got three slides to explain each of those. So if price is away from the POC, is there an error between price and POC? So what she means is there a gap between price and the POC? If there is, move on to the next step. If not, wait until there is. Number 2, did price reject? So check the retest and 2 reversal candles. I'll explain this, I'll demonstrate this later. Did price come back to the POC and reject? And the bit that isn't clear just from this slide is, by rejection, she's talking about price. Let's say this is the line that we're looking at. If price comes up to that and rejects from it, she's looking for 2 reversal candles. So if you're working on the 15-minute chart, she'll be waiting for 2 candles to be completed away from the line, and leaving a decent gap between the line and the price. And closure. So did the 15-minute, so this basically what she's saying is wait until the second candle actually closes. So if you're looking for a sell, you wait for the second candle below the POC to close before you get into a trade. When it closes, yes, take the trade. If it hasn't, just wait till it does. Right, are there any questions up to now? Or will I just continue? I'm pretty sure I'm going to go through this several times before everybody gets it. So space, rejection, closure. Right, so basically just to explain what this is about, she's talking about the two situations. Let me see if I can get back onto my other chart and just explain what she's talking about. Right, so we're working here on a different, we're working here on yesterday's information to give us today's point of control. If I just get rid of that and take this off, just strip it back down to bare bones. Right, okay, so let's take this example. Right, okay. Trying to find a good example of what she was teaching. Right, okay, I found it, yeah. We're going to do this in reverse. So we're looking for somewhere to place our volume profile. And if we're just talking about the first way that Anastasia uses volume profile, she would look for an impulsive move. So there's an impulsive move. It started way up there and it went down to there. So she would ignore these session breaks. So she'd ignoring these dashed vertical blue lines. She would want to put her point of control, she would want to put her volume profile. So she would use the free one, the fixed range volume profile. She'd click on that and she'd put that at the high point. So that's that candle there. And she would take it down to the low point, which is that candle there. So what she's saying is it doesn't matter what the time scale is. As it happens, it's about a day and a half. But she's now got her volume profile. She's got a POC clearly marked there, and she's got the value area starts there and goes down to there. And I think I'd better just draw those lines on. They don't need to be 100% accurate, but we'll put them on as near as we can get them. Okay, so we've now got our field of plays here. Field of play, point of control. Let's look at other potential just bear in mind that this point of control came from this area of activity, but there were a couple of other similar areas of activity. So so again, I'll put some lines on to try and demonstrate what the point I'm trying to make. I'll make these a bit paler. One, two, and there's another one there. Roughly there. Okay, so we've got some additional lines. So she would be saying, okay, we're in a downward trend. We'd be looking for sells. She'd be looking at the same as we do on the V70. She'd be looking for a sell down to there, but she'd also be looking for trades moving away from that point. So her first selling opportunity will be right up at the top, and she'll be looking for a sell to go down to the point of control. So that's pretty much the same as we do on V70. She would then be looking at this area here, and she'll be saying, okay, I've taken the sell down to the line, and she would either get out of it at that point or she'd stay in until this candle changed from green to red. But either way, she wouldn't stick at that point. She would then say, when does, if we're looking at the second candle, so that green candle didn't reject. She's looking for a rejection. She's saying price is coming down, and sooner or later it's going to reject. Well, it'll either reject or it'll go straight through. In this case, it rejected eventually. It bounced around a little bit and then it started to reject. Now at this point, it's still below the POC. At that point, it's still below the POC. At that point, it's starting to move away. It's still wicked down, so it hasn't sort of made its mind up yet. Here you've got a classic indecision candle. Here, I guess you'd be starting to think, hang on a minute, we're in an upward trend. We're starting to move north. And we've got a gap. This is what she talks about, air. Is there an air between? Well, she's talking about a gap. She's had, at the end of this candle, she's had two 15-minute candles which have been away from the POC. I'm guessing she would probably have got in on this candle for a buy. Let's see what actually happened. And sure enough, she'd have some drawdown, then it goes up, and she'd have some more drawdown, and then it goes up, and she'd need to be getting out at that sort of point. So that wasn't the best example of her strategy because it's actually returning. But there's still some pips there. Let's just have a quick look. Let's say we got in here. Let's say we got in there and just took it up to the top of that candle there. That's 50, about 15 pips, so not as big as I thought. But I picked a bad example of her strategy in action there. Let's just try and move out. If you look on this, we're still on the 5-minute chart. We should be on the 15-minute chart. Right. So this is the same scenario, but so basically, I guess she wouldn't have got in there because she'd be seeing that as a area of consolidation. She would wait until price moved out of consolidation and went up. So she'd have got in and taken a buy up there. Right, so not the best example, but let's move on to the other use of this strategy. When price came down here and broke through, so this is an example of price rejecting and going up. It was coming down, it messed around on and about the line, and it went up. So there was a small buy to be had there. And then here's the opposite happening. It's come back to the line, but this time it's broken through. So there's another opportunity. Now she may, I don't know whether she would have taken that or whether she would have waited until there was a more substantial move. The more substantial move occurs here, where this price drop occurred. So again, there's an area of consolidation. Maybe she would have got in for that trade there. Maybe she would have stayed in. I guess she would have got out because it's consolidating there. And then she would have perhaps got in as it moved away. So that's the way she thinks in terms of an impulsive move. She looks for opportunities both towards the POC and away from the POC. And she's got rules to tell her when to get in. So there needs to be a gap. There needs to be no consolidation. Now, I need to go back to the original, see if this is going to work. So we should be on the 1, 2, 3 slide now, are we? Can everybody see that?
Yeah.
Okay. So this price broke through refers to what I've just described. So in the first instance, we were looking at price coming down to the line and rejecting and going for a buy. And here she's talking about when price comes down to the line and breaks through. So if it breaks through, how much, she's looking for a gap between the line and price. And she's looking for, this is where Anastasia and I differ, because I tend not to use pending orders. She's saying if price was above but broke through and price has gone away, so is there a gap? And to define what she means by a gap, we need to go back to what she said about have 2 candles closed below. So she's actually stipulating how much of a gap she's looking for, or how much of a time period she's looking for, sort of 15 to 30 minutes to pass before she thinks about getting in. So if prices come below the line and is continuing to go south, move to the next step. And she would place a pending order. She would place a pending order, in this case, because looking at sells, she would place a sell limit at 3 pips below the POC. Personally, I don't use pending orders. I would actually wait The reason I don't use pending orders is I've been caught too many times where price has gone down to where I've set my sell limit and maybe even gone through it. So I'm in the trade and then it rejects, goes the opposite direction. So I've got the luxury of being able to sit and watch a trade. I would wait until price actually moves through and gets past the 3 pips below. And if I'm still satisfied, if it's still ticking my check boxes, then I would get in. Maybe if you've got tighter timescales and you're not able to sit and watch, maybe you go down that route of taking a sell limit. And she's giving you some padding as well. She's putting some padding, instead of setting the sell limit at the line, she's saying set it 3 pips below, and it seems to work for her. So I shouldn't really be knocking it, but I'm trying to tell you how I trade. If price was below and broke through, then the opposite applies. Wait and put a buy limit on at 3 pips above the POC. And so this is where she went through some actual exams, and she was asking people to give her the answer to these questions. She was saying, in this situation, there's the POC. Here's a consolidation. At this point, price broke through. So the question she's asking is price below or above? Well, obviously price is below. Therefore, we're looking for a sell. Is there a space between price and the POC? Well, yes, there is. At this point, there's a space. She might wait until the second candle. She might count that as the first one and that was the second. I'm not 100% sure. I would certainly wait until I was feeling comfortable, and I would revert back to my 3-step checklist. So that's the Ninja Matrix, the Ninjacator, and the crossover of the AMAs, which Anastasia doesn't use any of those indicators. So, perhaps it's fair to just follow her example. I would say that in this scenario here, where prices sort of it's come through, it's gone through, it's rejected, and then it's had a second attempt coming through, and then that third candle there has got a fair gap between price and the POC. It's probably fair that if I was to look at that and apply my checklist, probably fair to assume that I've already got a Ninja down. I've already got a Ninja Matrix down. I've already got a crossover the MOS. I would imagine. I haven't. I mean, I don't know what date she's looking at this, but it's fair to assume that she's got that my checklist covered. But I would apply my checklist anyway. I'm just ultra cautious. If I was taking this trade, I would use my checklist as well. But as you can see, price has broken through and it's continued to go down. There was an area of consolidation. Personally, I would get out when it got into consolidation. If you were feeling more secure, if you think, right, I've made all the right decisions, just you could stick in the area of control. What I would do is I would get out at this point and I would get back in at this point. Then there's less risk. But everybody trades in their own style.
And that one, Richard, that reversed twice before it did that as well.
Yes.
Yeah.
Yeah, it did reverse. So I mean, I can only tell you how I would trade it. That blue candle there, which I'm assuming on my chart will be a green candle. I'm assuming that blue is my green and orange is my red. I'd be thinking about getting out. Certainly at this point, when it's starting to dither, I would get out. And I wouldn't be happy getting in until I was in this situation here. But Anastasia's teaching is it's broken through, it's come away, get into the trade. It's slightly contradictory because she does say if your price gets into consolidation, get out at the first opportunity. That's one of her mantras. You know, even if you get out with a small loss, just get out. So I'm not 100% clear how she would deal with that situation. I suspect she would have got out, but you know, it's your decision whether you get out. So here we go. She's asking questions of the audience, and she's saying, okay, at this point here, did price reject the POC? No, it didn't reject, it broke through. So again, I think it's the same. I think it's the same. Oh, I know what she's talking about. She's talking about this one here. This is the example we've just been looking at, and it continued to go down. In fact, it went a long way down eventually, and then it went back up to the POC, which is, you know, this is the theory of the volume profile. The POC acts as a magnet, and so it's attracted price back. And what she's saying, did price reject? Yes, it did reject. It went through it and then it came back. So go on to slide number 3. So this is the same chart. Did price close below the POC? I'm guessing yes, it did close, because the bottom of the bar, not the wick, the bottom of the bar is where that candle closed. So yes, it did close below the POC. And she's saying, if you got in there, you've got another great trade. So that's the candle she's asking the questions about. Did it close below? Yes. I'm guessing she would have waited until the start of that candle, so there was a bit of a gap between, or she might even have waited for this candle. But she's saying get in because it's rejecting the POC. Whereas the 3-line strategy is taking trades towards the POC. This is now enabling you to get into trades away from the POC using some fairly simple rules. And I'm conscious of the time. I'm just trying to find a place to, I think I'll just go down to slide 36. So if we go to 31, just some more examples. So here, I'm not sure where she's asking the question here. Let's move on to the second slide so we can find out why. Yes, okay. So she's looking at this area. Is price above or below? It's above, so we're looking for a sell. Is there space between? I'm slightly confused now. So I'll move on hastily because I'm not quite sure what that one meant. But here, did the price reject the POC? Yes, it came to the POC. It went through it briefly and then it rejected off it. It's starting to go north. Did price close above the POC? This candle did close, well, that candle closed above it. So did that one, assuming that candle has now finished. Was it above and broke through? Yes, it broke through, so we can go for a sell. Is there space? Yes, there's space, so we can go for a sell. I've got a feeling we're just reiterating the same point here. So it's gone through. So do we place a set buy or limit or sell limit? Well, I'm assuming she's going for a sell, so she'll place a sell limit. And yes, she's saying yes, if you got in at that point, it did eventually go down. But again, I'm slightly confused because here's an area of consolidation. So although I've been through these slides many times in the past, I've just realized a sort of a slight fault in her theory, in that she would actually say get out when you're in consolidation. But this is the point I'd be looking at. I would draw a parallel line. I'd draw a parallel channel here. I'd have a parallel channel here, and I'd be saying, let me know when price gets out of that channel. So I'd be in on this candle. I wouldn't be in that trade personally. Right. So as I say, I've got about 50 slides. I need to go back over quite a few of them. Let me just before I finish, let me go back to today's chart and see what we can spot there. And I need to get rid of this. So just in, no, I wonder if no, I need to get rid of those, otherwise they'll distract us. So we're back on today's chart. The thing we haven't got is the volume profile. So I'll just quickly, just to save time, I'll just put the session volume. And today we're looking at a value area from here down to there. So we're currently outside of the field of play. So it gives me an opportunity to demonstrate something. So I put a line there and a line there. That's roughly our field of play between the two yellow lines. Right. So
I think you're on the wrong chart there.
oh yeah. Thanks
Well
for pointing
spotted.
that. I don't know why that. Well, I must have clicked on. Yes.
You're on Euro New Zealand.
Yeah. Right. I'm back on gold now. Thanks for pointing that out. I could have wasted a lot of time giving you enough information. Right. So let's just check we've got the. Yeah. This is yesterday's POC is a red line. This is yesterday's value area, the two black lines. So we're talking sense now. So there was an opportunity for a buy. There was an opportunity for another buy. There was a further opportunity following Anastasia's. She would be taking a volume profile and she'd be working away from that. That would be being her POC, and she'd be working away from it. At that point, she'd get back into this being her target. Well, we would have to use this as a target, and then we'd have to use that as a target, and then a third target down there, just using a variation of the V70. We need to point this out as well. This is today's point of control, which we do tend to ignore, but it is significant because the reason we ignore today's point of control is that it's developing. It can change. Before the end of today, this will have moved. It will have moved a couple of times during today, but you can see how important it was. Price came down to it, rejected, broke through it, went back to it, rejected, came down, went back up to it. So it is, it is a magnet. It is something you've got to keep in mind. If you were going for a sell from the top of that candle, hoping to get down here, it would have messed you about a little bit. It would eventually have come down, but don't lose sight of today's point of control. It is a bit of a magnet. The value area high here is showing itself to be another magnet. It's a line which price can bounce off it or break through it. And it's broken through it and it's gone back, and it's broken through it and it's gone back. And whether this price will now go back up there is one possibility, or whether it'll reverse and come back down to this line is another possibility. So you need to keep an eye on exactly what's happening. If you're just following the three-line strategy, your next move is going to be that one. And you'll be looking at a selling opportunity once it actually decides to come in. And then if you do the sort of the add-on version, you might, once it does break through that price, you might then want to take a a further sell down there. But I would take those as two separate trades. I wouldn't stay in when it was hovering around this price. I would rather be safe than sorry and take those pips and get out and then reassess and get back in again there. Let's just, before I do finish, let me just look at my my checklist. So here's the Ninja Matrix. It turned to a Ninja Matrix down at that point, and it's still red. So it's still indicating that we should be looking at sells. Let me just check my settings. I think I was on the right set. Yeah, I'm on the 1 hour setting. And the Ninja Cater, put the Anastasia candles on, and we had a Ninja down before we got the Ninja Matrix. So that's 2 boxes ticked, and the 5 MA is definitely well below the 13 MA. And the only thing that would stop me getting in there for a sell right now is the fact that we've got a green candle. Let me just change that to the 5 minute. Yeah, you can see it's having a bit of a pullback. So everything's lined up for a sell. And in fact, on the 1 minute, it's been up and it's now starting to go down. So this is sort of a temporary pullback, I guess. We've still got the piece out the top pushing price down, but it's having a bit of a fight. And if we look at the 15-minute chart, it's sort of hovering around about that line. So my approach would be, I've got a Ninja down, I've got a Ninja Matrix down, I've got a yellow 5 below the red 13. All I'm waiting for is a nice strong red candle to break through that line. I would want the price to break through because it's acting as a barrier at the minute. Okay, so somebody's put something in chat. How would I set my stop loss? Okay, that's easily explained. Let's imagine I'm going in for a sell. Let's imagine we've got the red candles here. The PSARs are on top, so it's just a matter of time before those candles change to green. Sorry, change to red. I'm pretty sure. So my stop loss will be slightly above that orange PSAR. It'd be sort of at 1921, maybe 1921.34, something like that. It's a bit of a vague statement, but you need your stop loss to be above that PSAR. There's if you wanted a slightly tighter stop loss, you could look at these wicks and just say that this is where price is now, and that's the previous high. That's the previous high is there, where that wick finished. So you could bring your stop loss down slightly to 1920.62. So personally, I'd go for that one. I'd go for just when that becomes a red candle, and when it's broken through that line, I'll be looking at where the PSAR is. Hopefully the PSAR will come down with the next candle. We've got 12, 13 minutes to go before the next candle. So when the new candle forms, it might well be, the PSAR might well come further down anyway. So does that answer the question? You only wait for the red candle to enter, or would you also wait to be with? Yeah, good question. I would assume I'm making a big assumption here, but we've got 12.5 minutes to go on this candle. I'm making the assumption that the next, if the next candle is a red candle, it will have crossed over that red line. I would certainly want it. Well, the rules are you don't enter for a sell until it's within our field of play. So sticking by the rules, wait until it's in the field of play. It just becomes slightly riskier if you take it before it goes into the field of play. So I think I've answered Okay, yeah, okay, got that. It's all, you know, everybody's individual approach is down to them, but I'm sort of trying to stick with my approach. I'd want to see two things. I'd want to see a red candle, and I'd want that red candle to be within the field of play before I got in, and that would be my stop loss up there, and this would be my initial target. I would take those pips if I was lucky enough to get them, and then I would reconsider getting in for a further sell down to the value area low. And before I leave, I shall just show you something else. Oh, there's another outstanding POC. Let's go back to where that came from. I think it came from the day before. Yes, it came from Friday. That was Friday. This is Monday, and we're currently on Tuesday. So Friday's point of control still needs to be taken out. So looking, you know, if price does come down, there are three targets. There's one there, and there's another one there. But as I say, I wouldn't set that as my take profit. My first take profit would be the POC. Why? Because it's got a habit of bouncing off. You could get all of those pips, and if you stayed in, it could reverse and take most of those pips back off you. So I would take those pips and then reassess and get back in, and then reassess at that point and then get back in. So any final questions, or shall we call it? We're well over time, but what I'm going to do, I'm going to continue trying to explain Anastasia's strategy. I'll do that on the session tomorrow at 8:30. But I'm going to keep referring back to it now that now that I had the go ahead to explain it and to use those slides to explain it. I can use those slides at any time. Okay, so everybody's questions have been answered. Okay, so thanks for jumping on. I'll be back on at 8:30 tomorrow morning.
Thanks very much, Richard. It's good.
Cheers, you're welcome.
Try and see you tomorrow.
I'll see you tomorrow at 8:30, and we'll end the meeting. Cheers.